All right, Dan. So you and I are going to be doing this first panel. So thank you everyone for joining. Today's discussion is called Blockchain Investing, Questions and Answers from the Front Lines of the Industry with Dan Simerman from IOTA Foundation. So just a little bit about Dan. Dan is an investor and technical product manager, well-versed in consumer psychology, digital assets, and open source software development. Dan has a history of building software for Fortune 500, Fortune 50 financial institutions, multinational media companies, and strategic consulting firms. As head of financial relations at the IOTA Foundation, Dan's goal is to support technology for a new type of open infrastructure, one where people and devices can seamlessly exchange data freely, safely, securely in a digital world. Dan, how you doing?
Doing well. How's it going?
It's going great. It's going great. So let's just jump right in. Dan, you're with the IOTA Foundation. How did you guys actually start, and what was your initial mission?
How did we start? So we started in 2015, and the original mission for IOTA, which is still the mission today, is that we wanted to look and see how we could build a type of distributed ledger architecture that would break into the real world in terms of software development. And what we saw at the time, and I think what we're still seeing now, is that it's difficult for blockchain to break into real world use cases, specifically permissionless blockchains, because of some of the characteristics of how they're designed, right? Because of maybe scaling limitations, maybe because of a requirement to use a digital asset, right? Needing to use a digital asset for applications that might just require data-based applications or just data-based use cases, creates a lot of friction for like real world adoption on the enterprise side, or even kind of outside of the traditional crypto world. So that was really IOTA's goal. IOTA launched the network, I believe it was like end of 2015, beginning of 2016. And kind of hit the wave in 2017 and kind of became like too big for itself. I think we kind of hit the wave a little too hard. And so for the last couple of years, while everyone was kind of freaking out about the market, we've been really heads down building. So in the last couple of months, we just updated the most recent version of the network called Chrysalis. We've made it like incredibly more performant, and we've been on this road to kind of full decentralization. But we're kind of one of the distributed ledgers that are really focused on kind of making the pie bigger. So yes, we have some plans to really work on smart contracts and have a lot of the crypto-centric applications where I think a lot of this investment activity is happening. But we've also really been focused on, real world applications like working with Dell and the Intels of the world and the Jaguar Land Rovers, and seeing how we can put distributed ledger technology into the real world.
That's really cool. So you spoke about your too much success. You guys are like, I think this morning when I checked, the 33rd largest crypto in the world. That's pretty amazing. So can you talk about like, how did you guys, when you first created the token, the distribution, like how does that work we see so many tokens all over, but one of the big questions is discoverability. How were you guys so successful at that?
Totally. And by the way, can you see me? Because I just see Michael's screen
showing
I can see the artificial. You. Okay, cool. I wasn't sure if yeah, so the question is, how did we kind of distribute the token?
Mm-hmm.
Right. So, this is kind of a way larger conversation, but one of the things that makes a project very unique relative to another is kind of their genesis event, how they came into being. And not all are created equal. In fact, many have very different kind of characteristics that way. So some will have kind of more of a traditional VC model where they'll bring on venture capitalists, they'll allocate a percentage of tokens to them, and then they'll kind of distribute the token between an ICO, which I'm sure you've all heard of, pre-sale investors, and then the foundation and the founders. And even though that can be a very smart model for success, right? There are ways that you can leverage that model in kind of the short term and midterm. There's kind of an ongoing debate about whether that is good in the long run for the sustainability of a project, because the token really is this key component that creates a lot of economic incentives on the network for people to participate, but it also has this kind of purity to it, right? Where if people feel like the founder owns too much of the token, can it really become this open global asset, right? Can it really become this thing that everyone owns, or no one's responsible for, but everyone kind of takes responsibility for if the founder owns 10% of the supply, right? Or if a foundation owns 50%. So there are some projects that have done that and have done it considerably well, but IOTA, because I think we came from this very skunkworks, this very like homebrew genesis, right? We started on a Bitcoin talk thread in 2015. So what we wanted to do is that we wanted to make it as fair as possible. So what we did was that we gave the entire supply away. So the foundation never took any thing directly. The founders had to participate themselves, so they weren't allocated a certain amount. What the foundation did is that once the foundation was established in 2017, there was a request that 5% of the total supply was donated to the foundation from everyone that participated. So that's what we did. 5%, if you kind of look at our history, turned out to be quite a bit of capital. So it gave us a lot of runway to build out the protocol, to do ecosystem development work, and really grow the protocol without kind of feeling like any one group owned too much of it, or that there was kind of this unfair start. And I think this gets into kind of a larger conversation about, do you see a digital asset as just an extension of a stock or a coupon, or do you really kind of align yourself more with the ethics of like Bitcoin, or I guess even to some degree like Ethereum?
So it sounds like the community and the community ownership and involvement is really kind of some of the secret ethos of these tokens and the successful ones, right?
I think it's the most important thing. And I think what you're starting to see now is that you're starting to see some projects, some of the kind of like second wave. I don't know if I should mention that. Maybe I should stay away from naming names, but like you can see that there are some that are successful because they're buying their way in very effectively, but they don't have communities. Mm-hmm. Some have really great communities, but they don't necessarily have like a really good playbook for how to broaden the scope of the token and a lot of the activity on the network, including like decentralized applications, DeFi and all of that. So you kind of have to find a really good balance. And this might be cliche at this point, but community is what makes a project stand out, right? A project's community, or I guess a project is only as strong as its community. And if you don't have that, it's very hard to buy that.
Okay. So I know there was Bitcoin, and then you saw a lot of these tokens were built on top of Ethereum. What made you guys kind of go your own route?
Yeah, so that's a great question. So IOTA is its own distributed ledger. So IOTA, like Ethereum is its own distributed ledger. dApps on top use the Ethereum distributed ledger for the most part. So we have our own kind of use cases defined, and kind of one of the biggest ones is IoT, right? So like when you think about the machine economy, when you think about devices talking to each other, even still, I mean, we've been having this conversation for 3 years, but even still today, it would be pretty difficult to put an IoT network onto Ethereum, given how expensive the fees are, given it doesn't really support edge computing, so devices talking at the edge of a network. Or when you think of like the biggest use case, which could be like, microtransactions, right? So devices actually paying one another. So it's pretty difficult to have to imagine a world where two devices want to send a fraction of a penny, but then have to use an Ethereum transaction, which could be hundreds of times more than that, the value that's trying to be sent. So we are a distributed ledger independent of Ethereum because we are, I wouldn't say competing with them. I think that there are some ways that we'll probably interoperate in the future, but we're distinct in that we're going to have our own set of dApps. We're going to have our own applications on top. So it's kind of like a distinct, separate ecosystem with its own value proposition.
That's pretty cool what you were saying earlier. You guys are working with car companies. I'd imagine they'd be able to talk to tolling entities and things like that going in the future. That sounds pretty cool. So a big thing this year has been all about the sentiment. And unlike other markets, with the crypto markets, we see that sentiment truly rises from the bottom. You have the meme stocks, you have the meme investors. Like, how have you guys handled that? And just kind of generally, what are your thoughts on that?
Yeah, and I, when we were talking earlier, that brought up this idea of like sentiment kind of bubbles from the bottom. What do I mean by that? I think that a lot of investors and I think venture capital firms that are coming in here, I think that they probably have a history, and again, I could be talking way outside my scope, so anyone can like smack me over the head if I'm out of bounds here. But I think that there's kind of an expectation for the longest time that, Silicon Valley was the power center, capital kind of sprang from there, and that, once we bless a project, we can kind of, work with the media, we can, create this kind of golden carpet or this red carpet to its success, right? Up until maybe it's IPO'd. I think that in the crypto world, you can definitely work in the VC world, you can definitely partner with the media companies, but that's really not where sentiment or interest lies. It really is in the kind of like, there's this term they called like degenerate. It's really where like these, people on crypto Twitter or Discord, if you've heard of Discord, these are people that are kind of looking for the hottest trend, and then they've got their own influencers, right? They've got their own tastemakers, and they're quite influential. So it's we talk about everything being distributed in the space, even kind of that in a way has become decentralized or distributed. It's not so easy to just say anytime you're listed on Cointelegraph or talked about in CoinDesk, like you're officially famous. Or, right. If you're listed on a big exchange, you don't even need to be listed on a big exchange anymore in the crypto world to even, garner a lot of capital or garner a lot of users. So even in that sense, the gatekeepers are being kind of slowly chipped away at. So in that way, I think it's really important as someone that's coming in with a lot of capital that either wants to invest at the application layer or even deeper at the protocol layer, understanding that dynamic and understanding what it means to not be kind of the sole owner of the narrative, so to speak, if that makes sense.
So you just said something really good. And I think some people are new to crypto and they're still learning all these terms. Like you said, degen, it's just a lot of jargon. Could you kind of explain the difference between the protocol layer and the applications in kind of a layman's terms so that people can understand that there's opportunities even beyond the coins?
Absolutely. Well, I mean, there's equity opportunities. I mean, you can even split that even further. So there's equity opportunities. There's kind of there's the tooling. So we've got, a lot of great partners like Bitcon. They've created this incredible analytics suite, right, that looks at how data on different blockchains is I guess recorded, the insights from them, and then laying that out to like investor insights. They're an incredible group, and they're just an equity company, right? Then there are decentralized applications that maybe are a mix of equity and the token. So maybe they have a for-profit entity, maybe they just have a token, and as a VC partner, you can invest, but what you acquire is a token and not equity. There are some that don't have VC funding at all. So there's and this, I think one of the questions that we have later, we kind of talk about this kind of new funding model that we're seeing where you align with a big protocol, and we can talk about that. But as a decentralized application, you no longer need to rely on, the one or two big investors. It's like, if you don't get them, you're going to fail, or maybe you're not seen as so big in the industry. So these are groups that have users. They don't necessarily need to rely on consensus because the underlying mechanism is already there in the protocol. So they can just focus on like the smart contract layer. So these are the groups that are maybe deploying smart contracts, trying to bring on users, bring in more, you've heard of like yield, or there's different applications that focus on, decentralized exchanges or launch pads. These are usually, a mix of like kind of classic infrastructure and smart contract functionality. And then you've got the protocol level, and the protocol usually in terms of scope and in terms of value generally accrue more value, right? So if you've got a protocol like Ethereum that's trading in the hundreds of billions, you're going to see applications on top that could be trading for tens of billions. But generally the application layer, the token on the application layer seems to accrue more value than the applications that are sitting on top of it. But the protocol layer, so that has everything to do with consensus. So how these nodes talk to one another. It's how you send transactions on the network, kind of like base layer stuff like that. So like EOS and IOTA and Ethereum and Avalanche and Polkadot. These are all protocol level projects, if you will. And then like like Uniswap and SushiSwap and all of those. Those are more like things sitting at the application layer.
Very nice. If anyone has any questions, feel free to put them in. We'll work them in. We want this to be interactive. So that was a great breakdown about the protocols and the tokens. Kind of to take it a step further, how do you classify just different digital assets?
Yeah, so that's a really big question. So, what I like to do, and this might not necessarily even be like rational, right? The market, or maybe it's too rational because the market isn't rational anymore, right? As we've seen,
Right.
we can kind of talk about that like in the world of like the meme stock kind of mutation that happened. But how I like to classify them is that one, I like to see, okay, like we said, is this a protocol level or is this like an application layer token, right? Is the token really have utility, right? It's oftentimes the tokens just create, I mean, the guilty secret in this industry is a lot of times tokens are just created to raise capital, right? And then they have to like back end a reason for them to be used. I think we're seeing that less and less with things like NFTs. I think you're actually seeing some really fascinating use cases there. I'm sure you've all heard of NFTs. I can go into one or two of them. There's a crazy one around like digital horse racing that's
Yes.
like fascinating. But so I like to classify it by kind of utility, right? What sort of value is it bringing to the network? Whether I like to define it based on what we were talking about earlier, like the genesis of it. So how did it come to be? Kind of like the initial distribution is really important. You also like to look and see how it's distributed over a period of time. So, you could see one token project have a $10 billion market cap or a $10 billion token supply, and they release 8 billion of those tokens over the course of a year.
Mm-hmm.
And you could have the similar project, different characteristics, similar token distribution or similar token supply, but that distribution could happen over the course of 20 years. Mm-hmm. So you have a whole different inflation schedule. So it's really important to look and see like how those break down. One of the biggest like amateur mistakes, if you will, is that like YouTubers will talk about how Dogecoin is going to $1 or how Cardano is going to $2. And then you'll see, regular retail, investors, or maybe not just retail, but people that are just kind of like new to the game will look and go, oh, this is at $1. Ethereum's at $2,000. That means I've got, 1,000x upside. Right. When the reality is that many of these tokens have different token supplies. They've got different schedules. So it's really important to kind of understand the token distribution mechanisms and sort of how those early token rewards are used, not only because it has an effect on the economics of the system, but it also has a really, really profound effect on how people perceive it, mm-hmm. right? If people, like we said earlier, people perceive that something's unfair, they might stay away from it. That being said, we are also moving into a very profit maximalist mm-hmm. environment. A couple of years ago, it used to be like, decentralization maximalist. I want to support something because of the tech. I want to support something because of the ethos. Now it's like, I want to support something because it's going to 50x, right? And that's like a whole different.
Greed is good.
Yeah.
Okay, so why do decentralized networks need digital assets? Why couldn't you have launched Ethereum without one?
Yeah, so there are networks that are tokenless, and those are called permissioned. But where a token comes into play is that there are these economic incentives that help people support the network, right? So like if Bitcoin had just said, run this software on your machine to help, to create a fair distributed network, one, I doubt as many people would have done it. Mm-hmm. Right. And I also doubt, and the flip side of that is that when you don't have a scarce resource like a token, you can easily attack the network. So you can spam the network, you can do all these things where you can congest it. So there's like a practical side, but then there's also an economic component. And the economic component is that, like I said, you need to give people and the node operators, so the people like running the software, a reason and an incentive to run it. And then hopefully over time, that incentive kind of moves to the side, and there's other great reasons to run a node on the network as well. But that's like a very important one. Now, the problem is that generally, and this might be like a controversial thing to say, but like my experience is that the more you design a system to make it like economically to make it like economically appealing, the harder it is to gain adoption in the real world, because anytime you have a token that's required, you're actually creating this friction point where, like I said earlier, like imagine, so, there's kind of this story going around where like, we're going to be the next internet, right? Ethereum is the next decentralized internet. Polkadot's the next decentralized internet. I think what's problematic there is that, like, imagine if we all had this internet, and every time we wanted to send an email, we had to have this wallet and put crypto in it and then debit, a penny or a dollar. Would you use email if you had to spend 5 cents every time you sent an email?
Right.
Would you?
Probably not, at least initially, until it became either the credits were generated so easily that I just didn't feel the cost. Probably be less likely though, because it's scarce.
Yeah, and then think about so not only do you have this, like, you're putting a friction point where it's usually abstracted, right? We pay $50 a month and then it's just kind of all happening on the back end. But now imagine being a company and going to them and saying, hey, we really want you to use Ethereum's permissionless network. And they go, great, we've been wanting to use Ethereum forever. Okay, now you have to download a wallet. And now your company has to hold Ethereum for gas costs. And oh, by the way, does your company even feel comfortable holding digital assets? Do they have the regulatory framework around it? Do they feel comfortable ethically? Maybe they feel like like there's so much friction there that it's actually that the token itself is stopping non-crypto use cases from propagating in the world.
So we got about 5 minutes. We got a question from Brandon Bruckman. Who wins and loses this game? Is it the project with the best blockchain technology?
Yeah, who wins or loses? So I think that this is it's a marathon, not a sprint. So I think the thing to look like, who's going to win ultimately, it's whoever has the largest treasuries, right? Like there are some groups that have $1 billion in treasury, right? Now they're not allocating it effectively, but they're going to be here for a very long time, right? So who wins here is, and this is something we've been focused on for a very long time, is that whoever wins is who transcends just becoming a product. If you're just a blockchain product, like if you're a protocol that's just trying to productize, I think you're going to fail. Where you really succeed is when you become a global standard, like an open source global standard. That's something IOTA has been focused on for years. So, we get referenced in patents all the time. We don't even talk to these companies. They just reference us because they see that we're kind of in the common lexicon.
Okay.
We work with some of the largest standards bodies in the world to become a standard. So I think that the winners on the protocol side are those that become more open source, more standardized, and then kind of be seen as this like open tech. I think on the application side, it's whoever has like the best tooling, right? Like Binance Smart Chain right now, they're crushing it because they just made it really easy and slightly cheaper, and people jumped onto it. But insiders kind of say that they kind of feel like the chain is great for what it is, but I think they're kind of looking elsewhere because they see it might not be a long-term solution.
Because it's so centralized?
Yeah, that's one of the reasons, yeah.
All right, so 2 more questions. One was, can you explain the funding model process for cryptocurrency projects?
Yeah, so I mean, there are probably a couple different ways to do it. I think one of the best ways, for the purposes of this, let's focus on like the application layer. So generally what's happening now is that an application will usually want to align itself with a protocol. So any of you that are either VCs or applications that are thinking or entrepreneurs that are thinking of launching a decentralized application, I highly recommend doing some research and reaching out to a protocol that you align with, that you trust, that you agree with, whatever. Because it's smart capital, right? In the most literal sense, and they can provide you a lot. So the first thing that you generally do is that you try and get a grant from these groups. So these groups have multi-million-dollar grants programs. So you get an early grant to test out an idea. Maybe you can hire a developer. Maybe sometimes you even have a team already, but it's just kind of a show of confidence. You build out a prototype, you build out something using the tooling available on that protocol. So maybe you go with IOTA, our smart contract solution, you go with Polkadot. Ethereum probably isn't giving grants out as much so right now because it's not as competitive as some of the other second layers they're trying to compete with Ethereum.
Right.
Then you've got these venture capital funds that are looking pretty intensely right now to invest in these groups. So they could, you could raise anywhere from 100K to 2-3 million to bring on some founders and to bring on some backers. And you want those backers just as much for their industry expertise, for their network, and for their access as their capital. So that's really important. And then from there, generally, if you're describing something that has a token, you're going to want to then work with either a launch pad. So a launch pad will then take the token that you've modeled out and then put a small allocation of it to kind of retail investors, if you will. And those are usually outside of the US. It's usually regulated. Some groups like CoinList are like a good example. And then from there, you actually launch on what's called like a DEX, on a decentralized exchange. And so you've gone from grant all the way to decentralized exchange. And now what do you have as an entrepreneur? You have a network that can help get you into these really key markets like Korea and Singapore and China. You now have these crypto VCs that want to give you access to their networks through media, through user base acquisition. And now you have a liquid market. You've got a digital asset that can be traded. And then there's kind of like some price discovery there, but that generally seems to be the one of the routes. And you see some groups that are doing that more effectively than others, but that's kind of like one playbook that's a really good way to start. And happy to, if anyone on here wants to ever chat about that, I'm happy to chat.
Yeah, so I think we're at the end. Can you kind of give some brief contact info and what's next for IOTA, and all under 1 minute if you can?
Yeah, no. So find me on Twitter, Dan Simerman. You can send me an email, dan.simerman@iota.org if you want to chat, and we can talk IOTA or just kind of the general crypto industry. What we're focused on right now is actually, we just described right now is that kind of ecosystem development. So we're just kind of building out this smart contract protocol called ISCP. So for the first time ever, it's been one of the biggest requested features for IOTA. So we're going to start to have these decentralized exchanges, these
Nice.
Sorry. A lot of these like more crypto-centric, sorry, more of these more of these crypto-centric applications. So we're kind of broadening our scope in that way. So that's going to be very, very exciting for us, and then kind of growing and building more partnerships.
So Twitter and email are okay?
Yeah, that's probably the best.
All right. Well, thank you so much. This has been great. I wish we could go longer, but I'm sure we'll see you again.
Thank you, Jeremy. And thank you, Michael. Thank you for having me.
Thank you for coming on, Dan. It was very interesting talk today. Alex Mashinsky, how are you?
Great.